What's good, YouTube? Charles FX back again, man. Like I always say, here to put you on game. But before we get right into this video, I just want to let you know the purpose of this video is to show you how to catch the retracement and the continuation of a trend at the same time. So please don't skip any parts, man. Watch till the end. So with that being said, let's get to business. So taking a look at USD CAD or USD CAD or US dollar Canadian dollar, what do we have to do first? Like I always say, we first need to identify our trend. We first need to do what? We first need to identify our trend. I repeat, you first need to identify your trend. So looking at our chart, what trend are we in? We are in an uptrend. How do I know we are in an uptrend? Let's identify our market structure. So price creates this lower high right here. Okay, so after this lower high was created, what did it do? It came back down to create this lower low. What did price do? It came back down to create this lower low. So after it created this lower low, what did it do next? It repeats itself by creating a new lower high. What did price do? It repeats itself by creating a new lower high. Do you get me? So after it created this lower high, what did it do? It continued back down to create a new lower low. Do y'all get me? What did price do? It continued back down to create a new lower low. So after this new lower low was created, what did price do next? It goes back up to create a new lower high. It goes back up to create a new lower high. So after it creates this new lower high, what did price do? Came back down to create a new higher low. Why is this a higher low? Because this low is higher than that of this low right here. Okay, and someone may ask, why didn't I mark this structure here as a lower high or as LH? My reason is because this lower high never closed below this lower low, so this isn't actually the last lower high price did. This is okay, so we are only considering a break of structure after price closes above this lower high. Do you get me? This was our last lower high price did. So till price breaks that structure, it's not considered a break of structure, or to me, price hasn't changed its structure. Okay, so after price created this higher low, what did price continue to do? It continued back up to create a new higher high, and this time around it didn't just create a higher high, it closed above our previous lower high. So at this point we can say price has changed structure, okay, or price has broken structure. So at this point we consider this as a break of structure. Do you get me? So after price created this higher high, what did it do next? It comes back down to create a new higher low. What did it do next? It comes back down to create a new higher low. So after it creates this higher low, what did price do again? It continued back up. Okay, it continued back up to create a new higher high. Why? Because this high is higher than that of this high, or this high is higher than its previous high. Okay, so looking at this formation right here, we can see this is a bullish formation being created. Okay, because you can see higher highs and higher lows being formed, so it's considered a bullish trend. Okay, but note, The purpose of this video is to show you once again how to catch a retracement and a continuation at the same time. I repeat, the purpose of me doing this video for y'all is to show y'all how to catch the retracement and the continuation of a trend at the same time. Alright, so after price created this higher high, what was I expecting? All I was expecting was price to come back and retest this lower high, or retest its last lower high, which was a resistance as a support. Okay, I repeat, I was waiting for price to come back and retest its previous lower high, okay, which was also a resistance as a what? As a support. Do you understand? So whilst waiting patiently for price to retrace back to our previous lower high as a support, what did I do? I went back to my H1. I went down to my H1 time frame, and coming down to our H1 time frame, what do we see? We realize this was the last higher low price created before creating this higher high. Alright, this was the last higher low price created before creating this higher high. So after price created this higher high, what did price do next? It broke below our H1 higher low, meaning the retracement is about to take place. As soon as price broke the H1 structure, I knew the retracement was about to take place. Okay, so when price broke below this H1 higher low, what did price do next? It came back up to create this new lower high. What did price do next? It came back up to create this new lower high. Okay, I wasn't around at this time to take this trade. Alright, but let's continue. Let me show you all where I took my trade. So after price created this lower high, what did price do? It went back down again to break its new lower low and created a new lower low. So since price created this new lower low, okay, this lower high, or this previous lower high, becomes our new what? Our new structure. This new lower high becomes our new structure. Remember, so price breaks this lower high, we are still in a downtrend. But when price breaks this lower high, then it means the H1 structure has changed back to bullish. I repeat, till price closes above this lower high right here, this H1 lower high right here, we are still in the downtrend. Okay, but as soon as price breaks and closes above this H1 lower high, it means the H1 structure has changed back to bullish, and it means the probability of our retracement not coming into our zone, it's high. Do you all get it? Good. So after price comes back down to create this new lower low, what the price do next? Price goes back up into our lower high. Price goes back up into our lower high zone, which is our previous resistance, which is also serving as a resistance. Okay, so when price went back into that zone, what did it do? It rejected Look at this huge rejection. Price rejected, came back down, and went back into the zone. So when price rejected the first time, it gave me, some kind of confirmation that price that the bullish momentum wasn't enough to break above that lower high. Do you get me? It gave me a confirmation that the bullish momentum wasn't enough for price to close above that lower high. Okay, so after price rejected, what the price do? It came back down and continued back up into the zone. And study the candlesticks as price was going towards the zone. Study the candlesticks. It started to short right here. Alright, this candlesticks, this small candlesticks or this little candlestick should tell you that the momentum that price was using to get to that zone was small, wasn't enough, but it still managed to get into that zone. Okay, so when it got into that zone, what did it do? When price managed to get into that zone, what did it do? It rejected. You see this rejection right here, meaning price has given us two rejections, building up our confidence that now price is still going to drop. Okay, so after price rejected and closed bullish, one next candle followed, a doji. The next candle that followed was a doji. This candle right here. Okay, and after this doji formed, one next candle followed, this bearish candle. And it wasn't just a bearish candle. This bearish candle had momentum. Okay, it had momentum, which showed us that sellers are in the market. So this 1, 2, 3 candles is called an evening star candlestick pattern. What did I say it's called? It's called an evening star candlestick pattern. Alright, so after the closure of this bearish candle, that's when I decided to enter my trade. Okay, so I entered my trade right here, put my stop loss right on top of the wick of this bullish candlestick, and my take profit right into my retracement zone. Okay, my take profit into my right into my retracement zone, which gave me a 1:4 risk to reward ratio, meaning I was risking 30 pips to make 128 pips. Alright, so this was my first trade. This was how I caught the retracement. Now we are moving on to the next on how I caught the continuation back to the upside. Remember, the fact that we were catching the retracement didn't mean that price was in a downtrend. Remember, the H4 was bullish. So the fact that we are trying to catch the retracement on the H1 doesn't mean the overall trend is bearish. No, I always say this. The fact that we are trying to catch the retracement on the H1 time frame doesn't mean price is bearish. We still know at the back of our minds that on the H4 is still bullish. So we are still looking for bulls, or we are still looking for buys, or we are still looking for longs in the long term. Do you get me? So after price got into our retracement zone, what are we looking to do? We are looking to buys. I repeat, after price got into our retracement zone, what are we looking to do? We are looking to what? To buys. Okay, so now let me delete this let me delete this so we can continue. I can I can explain to you all how I caught a continuation. Okay, so when price came into our retracement zone, what are we looking at? Let me clear this box so it becomes clear for you. Okay, good. So when price came into that zone, which I just cleared, what did I do? I drew a box right here. Okay, from from the body to its wick. Alright, that's how I drew my zone, and I patiently waited for price to do its thing. Alright, so when price came into that zone, what did it do? We can see price reject that zone. So after price rejects that zone, what does it do again? It goes back up and comes back into that zone. So as soon as it did that, all I did was to draw a line, okay, and use that line as my neckline. That I'm only looking to buy after price breaks or closes above that neckline. Okay, so after I did that, what did I do next? I just waited for the Fed news or the interest rate news, or what a lot of fundamental sites call FOMC. So that's what I waited for. So we can see this wick right here, this long wick right here was the FOMC news, and this long wick right here was also the FOMC news. So the news created these manipulations. Okay, so after this happened, what was I waiting for? Like I said earlier on, all I was waiting for was a closure or a break of this neckline. Then I go in for longs or buys. So I waited patiently, and lo and behold, what did price do? Price came into the neckline, rejected the first time, went back up into the neckline, rejected, and finally decided to what? To break the neckline with a what? With a bullish engulfing candle. Why do we say a bullish engulfing candle? Because this black candle, the volume of this black candle is more than the volume of this red candle. Okay, good. So after the closure of this engulfing candle, what did I do? As simple as that. I entered my trade right here, placed my stop loss right below here, and my target right to the next or to our previous lower high, which is this lower high right here. Why is this a lower high? Because this lower high closed below its previous lower low, or this lower high was the high that created this lower low. Okay, this lower high, sorry, created this lower low, which broke below its previous what? Lower low. So this lower high right here is considered as a new what? Lower high. Do you understand? Good. So after I entered my trade right here, I put my stop loss right below this area or this wick, and my take profit right to a lower high. Good. I'll take profit right to a lower high. So this is my take profit. Okay, this is my first take profit. And if you are to go back to our H4 time frame, okay, and drop back that box or drop back that zone, we realize that if I take my Fibonacci and drop from this higher low, this H4 higher low, to its higher high, okay, the retracement came into our Fibonacci golden zone, which is our 50 and 61.8 retracement level, which we call the golden zone, which is also in confluence with our with the H4's lower high or our previous resistance. Do you all get me? Good. So let's go back to the H1. So this becomes my first take profit. The H1's lower high becomes my first take profit. And if price is to get to that take profit and still has enough momentum, my second take profit will be my Fibonacci negative 27% extension zone. That will be my second take profit. Do you all get me? That will give me a risk to reward ratio of 1:7.48, meaning I'm risking 27 pips to make 200 pips. Do you all get me? Good. So it's as simple as that. It's as simple as that. So in case you don't understand anything, please feel free to ask me anything or DM me and ask me anything in my DMs. I'll leave my Instagram link below in the description box. Or in case you still don't understand anything, you can go back and repeat the video or replay the video so you understand how I did this, okay? Or to understand how I caught these entries, okay? So probably this trade will be more like a swing trade. Yeah, this trade will be more like a swing trade. So I'll be holding this trade to when price gets to my take profit, to my first take profit, and it breaks through directly, I might hold this trade for myself. I might hold this trade for my second take profit to get hit. For real. Yeah. So I would like to end my video here at this juncture. But before you click off this video, please don't forget to subscribe, like, and comment down below. Alright? Charon FX. I'll see you in the next video. Peace.